Hello, everyone, and welcome to today's live stream. A little bit later than usual because it's market's been quite desultory, and we were in two minds as to whether we were going to even do one today because it's end of the week. It's also the end of the month, and all the sort of fireworks have already happened in terms of the FOMC and the tariff talks between China and the US. But sometimes it's quite a useful exercise to look at the markets when they're in this kind of state, as it were. First of all, to help us recognize and what how do you recognize that the fact that nothing's happening very much at the moment. And it's also a great exercise in patience because as Warren Buffett once said, he made most of his money when he was sitting on his hands. Now, I do appreciate as day traders, we can't sit there day after day after day. We do, that's the by virtue of its definition, it's day trading. So we want to find a trading opportunity. But there are times when we are offered these sorts of days, and really we want to try and make the most of them in terms of perhaps our education, reviewing levels on our charts, particularly, as I said, this is the end of the month. How is the month going to end? What to look forward to in terms of fundamentals, etc., etc. So no day is ever unproductive because if there's one thing about this activity, this business, is we never stop learning and we can never hope to know everything there is to know about the markets. So it probably won't be very long this session. And I think what I'd like to do is I'd like to go straight to share my screen. Because there are a number of things that I would like to highlight. There we are. Take myself off and just put the screen up. And what I've done is I've been going through changing some of the chart configurations that I've used. And today we are going to look at forex. The futures is at the moment. The NQ, it's, as David says, it's on a razor blade, and there's so much more to say about forex at the moment. Overall, in forex, the market, aside from bouts of volatility, we certainly saw that today, this week, because of the FOMC. Volatility is pretty sort of low in terms of the sort of standard pairs that most traders trade. That's the majors and some of the cross pairs. If you go into the exotics, if you go into, I don't know, dollar Mexican peso, dollar Turkish lira, you will certainly find volatility. But with volatility also comes greater risk because, as I've said many times before, volatility is non-directional, apart from one particular circumstance in the markets, i.e. the VIX and the SPX. So what I'd like to start with, David and I have been doing this for many, many years. And those of you who know us know that we have two other activities. We have a company called Quantum Trading, which produces specialist trading indicators, and some of the first ones we ever did was for the forex market, because the forex market is unique in as much as that you are trading one currency against another, and in a way, the first exercise you have to undertake in forex, you have to kind of deconstruct the market in terms of flows. Where is the money flowing into which currency? And then we have to try and decide, well, maybe, is the pound being bought today? Where is it being bought most strongly? That's our starting position. So if you're the sort of trader that say, I like to trade the British pound, but I'm not wedded to one or two pairs, I'm open to other pairs, you have to find a way of trying to identify where the strongest buying or selling is in the British pound. And that applies to the other currencies as well. And that really was the starting point for the development of these indicators. And we have four principal ones. Over here, we have a currency strength indicator, which I know most of you are familiar with. Sometimes they're called currency strength meters. And what it does, it deconstructs it into the individual currencies. And we can see here quite strongly. I happen to have it on the hourly chart because we've had the session crossover. This is 8 o'clock this morning. Up to 8 o'clock, as you can see, the dollar was in an uptrend. It was being bought, and we've had a bit of a rollover since then. Down here at the other extreme, we have the New Zealand dollar. Again, that was being sold pre-London, and 8 o'clock, by the way, is our local time, which is the London Open. And that's also turned up. So the first thing this tells us is, well, okay, these we call them extremes in the sense that they're at an oscillation point. It's like a sine wave. But as you can see, currencies, as all markets, can go way, way over these extremes in terms of overbought and oversold. But we had to sort of give some kind of reference point to the currencies, and these are the most. So if you were coming to your terminal immediately, it would give you an instant picture of which currencies are on the move at the moment, where they have come from, have they just been trending higher towards one of these overbought and oversold states, or are they still on that journey? And then you can go and do some further investigation. And as we can see here, the British pound has been falling, the Canadian dollar has been falling, and the other thing about this indicator is the angle of the line and the angle of the slope of the currency, and that tells us that there is a degree of momentum. There is some, somewhere in the pound pairs there is a half decent trading opportunity. What's also interesting is if they're moving in the same direction, the chances are that you don't have that divergence that you need with currency pairs. What you really want to see is one going one way and one going the other. When they're going in the same direction, it is telling you that the likelihood is that they are in a congestion. It doesn't mean you won't be able to trade within that range or within that congestion, but it's not going to move very far until, as I said, one of them really picks up the pace, and you get the divergence, the strong divergence that you want to see with a decent trend. The euro has been bought as well. There's been some euro news this morning. The Swiss is still turning higher, and the Aussie, well, is sort of kind of doing its own thing, and the yen is sort of moving, not doing very much at the moment. So that's where we start. Now that's awfully interesting because that tells you the where the money is flowing into, which individual currency. But really, we want to know which pairs to go and look at. And we have two indicators for that. We have one called the currency array, and we have one called the currency matrix. Now, the difference between there's similarities and there are differences, and one of the main differences with the array is you will actually see it gives you a real time picture into. This happens to be the pound pairs, and we see it. There's a median point, and they operate like windshield wipers, and it kind of gives you it gives you a visual picture of which of these pairs has actually been trending, where it is it a strong trend, and a feature of the indicator is this: when this line becomes solid, it is very, very either oversold or overbought. What it also tells you is there a consensus with all the pairs, in the sense that in the pound pairs, the British pound is all on the same side of the pairs, and as you can see, there isn't. It's been sold heavily against the dollar, sort of sold against the pound, but it's actually rising against the yen and I'm sorry, and falling against the euro. I beg your pardon. The euro is euro pound. It's not pound euro, and pound Aussie sort of rising as well. What it can also tell you is if I move down to one of the faster time frames, because this is on the hour. So if I move, say, down to the 15 minutes, and what that tells me is when they're all sort of bunching here, this is what we mean by the congestion, the lack of momentum. Yes, there may be a trade there for a few pips, but generally the currency pairs haven't moved strongly in one direction or the other. What the hour tells us was obviously a slower time frame, is that possibly on the pound dollar, if it falls any further, could there be an opportunity for a reversal? We would have to go and look at the chart to see where the price action is in terms of support and resistance. Are we at one of those key levels? Maybe it's trading at a confluence of strong resistance or strong support, and that could explain why we haven't actually seen any movement yet, because we really haven't seen much movement in the faster time frame. So you can do all this without having to consult the individual charts, and we've got 28 charts here, and you have this table here with the array, and you have, and there's a statistical basis. It tells you this is now oversold, what is reaching overbought, that's the most oversold. And if you want to change the actual currency that you want to explore in more detail, just have to move my video thing there. If you go into the settings, it's very simple. You go into the filter. As I said, that was for the pound. If you have none, which you can do, that tells you what they're all up to. And as you can see the dollar yen has been moving up quite strongly. Is that now approaching an overbought? Yep, it's right at the top. It's number one, and the oversold, as we saw here, is the New Zealand dollar, and it reflects what we saw on the individual currencies on the CSI. It's just nice to see these the actual pairs moving. Now on the hour, they're not going to move very much. You can go down to the faster time frames and see how this works in more detail. I have a look back. There is an RSI built into this. I have it set at 7. You can have it set to 14. I like it at 7. I just like it a little bit faster. So that's that one. So that's the array, one of my favorites. And we have a similar one with the, this is what we call the matrix. This is more, traders who have this and tell me that they really like to use this as a kind of scalping tool, and the reason they like it is because at the top there are these numbers which, if you're not going to be in there for very long, if I actually move down to say to the 5-minute chart, it's probably easier. Let's say it calculates. It says you kind of work on the numbers, and what it says for the euro pound, it says at the moment it's 6.73. Please don't ask me how it's calculated. I don't know. But it tells you what the all-time high is and what the average is. And that's what they look for. They say, right, this is a statistical approach. They have that information. They go to the chart. They look at the candles. They look at the volume. They look at any other indicator that they may use. But it gives them a sort of higher probability trade, as it were, to know that in this time frame it has reached an all-time high for that particular pair. Particularly when you're looking to, at the bottom, you can see here, this is almost getting there. It's a great indicator for that approach. But as always, with all indicators, you really need to, they're there to assist us, to give us the information that would take an awful lot longer to go and dig out without having to look at, as I said, 28 charts in multiple time frames. But talking about multiple time frames, we also have the fourth indicator in our specialist forex ones, and this is what we call the heat map. And as we can see here, we have the pair, but it tells what is happening in the minute, the hour, the 4, the 1 day, and the week. And this is great because we can see here with the dollar yen on the week, the day, the 4 hour, and the hour. It is in an uptrend. It's in on a week. It's been on quite a strong uptrend, but you can see the pullbacks, if you like, those those perhaps beginning of those reversals. And the best example we can see of that is the Aussie yen. We can see here on the week it's been up, the day it's been up, but as we can see here, we started the ripples of possibly a reversal opportunity. As I said, this is purely a means of perhaps identifying either a trading opportunity if you are not wedded to a select number of pairs. It's a great way to scan the markets, the 28 pairs that we have. But if you are, say, you have 2 or 3 pairs that you like to focus on, it gives you a visual picture of what they are doing. Now, if you do pairs, if you do 3 majors, perhaps, that all correlate with one another. Maybe you like trading Aussie dollar, pound dollar, euro dollar. It's interesting to see, are they all behaving in the same way, or is there some kind of divergence? Now, the advantage of, if they're all doing the same thing and you take a position in all of them, so you buy the dollar in all of them, you do have to accept you're taking more risk because you're just you're tripling up on your opinion that the dollar is going to be bought or going to be sold. Down at the bottom here is also quite interesting. And as I said, this is the pound dollar and reflects what we saw on the array. Did you remember how oversold it was? It was sold on the week, on the day, on the 4 hour, on the day. Now, but are we perhaps at an inflection point? And it's quite interesting because I've actually got the pound dollar in the chart. And so it's just, as I said, it's just a great way of getting a very fast overview of what is happening in the forex world. And what I hope has come through from this is, well, who is this for? Is it just for day traders? Is it for swing traders? Is it for longer term traders? You can use it in whatever way suits your trading style. And you can find all the details and loads of videos on the site at quantumtrading.com. I think David's going to put the link in the chat. There is also a special offer for those of you who come along to these sessions. You will get an extra, is it 20%, David? There's an extra 20% off the price. And there are bundles there as well. So, given our quick tour around these 4 indicators, it was the pound dollar that came up. We've got the pound yen, and I've also got, there we are. And this is, and so I want to talk a little bit about the today's open. But as always, let's start with the slower timeframes. Given that we've done all that with the specialist indicators, and we can see why the pound dollar is where it is. If I go on the week, that's the week. This is the move that we have seen on the pound dollar. And no surprise, there we are. What's interesting for those of you perhaps who are coming along for the first time, what I do with the slower time frames, with the daily and the weekly, is I like to mark them up myself, not use an indicator, simply by eye, and mark up those key support and resistance levels. And the reason I do that is because when one of those levels turns up in the faster timeframes, where, let's be fair, that's where most of us are, then it becomes even more significant. And where pound dollar is at the moment is at 131, as we can see here. And I've got FXCM here because I have data going back to, I'm going to really 2019, I think it goes back to 1971. It goes way it goes way back, longer than we have been trading. And you might think, well, why do you need that? You don't, I suppose. But it's interesting in forex how these very old levels still resonate years and years and years later. It's quite extraordinary with forex. It's one of these. It's just one of the quirks of this market, and we can see back and we say, well, what actually happened at this level? It's there in front of us now. That's in yellow. In blue, that is a monthly level, and a monthly level becomes even more significant if it appears close to the price action that you are at the moment. And there we are. And this is, I asked David what this was 2022, and this was the disastrous premiership of Liz Truss, where she was actually forced out as one of our shortest ever. Not shortest in terms of height, but short-lived prime ministers, and that's that candle there, and that produced that level, which actually goes way back there, back to 1984. That wasn't black. That wasn't the ERM, was it, David? Was that the ERM? Might have been. It might have been the ERM. That's it. So do you see? That's really quite extraordinary. So that's the monthly. Let's go back to the daily, and let's bring this up again. So this is really confirming everything that those four indicators were telling us. So then I have the hour, and then I have the 5 minute, and I have, in fact, I have 2 5 minutes. Sometimes I take this to 3 minutes, and this is what I wanted to show you. And here we have. Let's take the VWAP off a second. This is the level that we have on that daily chart, and if it goes through there, then where is it going to go? That's the next level. There's support level that we can either get from the daily, or we can get from an interim level. And I either use the hourly chart, and I sometimes use the 12-hour chart. And you might think that's quite unusual because each forex session is only 8 hours. 24. These are 3 distinct sessions, but it's something that one of the readers of my book sent me a little message on X and said, and asked me, said, have you ever looked at the 12-hour chart? And I said, no, I hadn't. And he said, oh, well, do have a look, because sometimes it can throw up some very, very interesting levels. And I have, and I've been playing around with it, and you play around with it as well. So when you can't find a level maybe on the slower time frame, but you can, and the faster time frame doesn't really give you much information, then the 12-hour again, and we'll have a look at the 12-hour with pound dollar with cable. So here we are. This is 7:55. This was the London Open. There was a lot of volatility in Europe. As I said, there was a bit of news come out. And what do we have at 7:10? We had this really nice hammer candle come in, decent volume underneath it. That actually pushed it up to just before the London Open at 7:55. And in fact, we had this hammer candle. Now, normally we have a lot more volatility at the London Open, and David and I always say, look, don't rush in straight away. Let it settle down. See what the opening high is and the opening low is. And for that, you really need to decide, well, how long should I wait? When there's no volatility, you probably have to wait a little bit longer. As I said, we've been sat here since then. It came off that shooting star, but it's been moving sideways. We know it's sideways because we've got the pivots there, and we've got this. So the low has actually been marked for us based on the level that we took from the daily chart. When you get lots of volatility like this, probably after 5-10 minutes, you can possibly put it was a 7 o'clock candle. Let's have a look. That's the 7 o'clock candle. Well, that was the high at 7 o'clock. We've got volatility. We've got the volatility candle. We've got a lot of volume coming in as well. And you could say, well, let's take the low of that candle, as we do with the volatility candle, the dominant candle. We call it all sorts of things. So a lot of volume came in. There was a bit of wick. There was a wick to the bottom of that candle, and we did have a retrace behind into it, but it didn't hold. So you could take from that, wait for the break of either the high and the low, and it did carry on lower. And then we had stopping volume coming in with the hammer. But for pound dollar, very much this level that's come down from the daily. And if we go on to the next one I look at is the hour. And here we look at the Camarilla because these levels are refreshed every week. And in fact, the cable has actually gone through. Oh, sorry, I do beg your pardon. This is the 12-hour, but these are the levels that come off the hourly chart. And we can see here, where's it stopped? And this is what I mean about the 12-hour chart, which I hadn't really appreciated before. And we have it here. We have it here. You probably could pick it up on the hour, on the 4-hour, but you'd have to really, really, scrunch it up. So there we are. So a hugely important level. And what do we do now? Really, it's a case of waiting. We really have to wait. Is this level going to hold? Is it going to go higher or is it going to go lower? And that is obviously going to depend on the Dixie. So we look at the Dixie. And I have it here on 4 charts. I've got this marked up as well. The most important level for the Dixie is the 100. It's a nice round number. It's been sort of meandering between 97, which came from the monthly chart, and to the 100, which comes from the daily chart. So that's a really quick way of looking at levels, trying to establish which pairs are likely to produce a trading opportunity or not. What you can do on days like today, when it's the end of the month, I suspect there's probably going to be more of an opportunity when New York, the North American session begins. There's all sorts of things happen at the end of the month. There's dollar buying, there's a rebalancing of ETFs, there's all sorts of things. So the stock market will be churning away quite happily. And of course, we've got all the options expiring, end of month options, end of week options. So I hope you found that useful. I'm actually going to pass over to David now and to see what he's got on offer.